From optionality to inevitability, navigating this resource cycle. So over the last year, probably more than a year for gold, metal prices have done exactly what they should do. You know, gold is that hedge, is that alternative to the USD, probably will be that neutral reserve asset moving forward between countries, the way the trade is done. You know, I don't think it's going to be a straight up move, but obviously I'm very bullish on gold. The same goes for silver. It's kind of done the prototypical move where it's moved after gold, moved much stronger than gold, and has probably a stronger silver bug presence than the gold market. Copper, on the other hand, after a couple false starts over the last couple years, really had a nice move this year, and I think this is going to be a level that we are sustained at and probably move up. When policy credibility replaces discipline, favor assets that don't require belief. And I think these three metals in particular are where you want to be, especially in the short term, and the ones that I'll probably focus on myself, especially on the gold and copper side. So I'm of the belief that inflation isn't gone. It's fully embedded into the system. You know, as a society, we've put governments in place, left and right wing, that just want to spend. You know, there's a big issue with debt. I think that's pretty evident to everybody. Yet, we still vote for people that have no respect for that aspect of running an economy. And I don't think that's going to change moving forward. And that'll, of course, lead to crisis. I think there's obviously turmoil ahead. We've seen some of the stuff that's come out of, you know, the president's and prime minister's mouths at Davos. I think we're headed for more conflict in the future. And I think their response to crisis is going to be exactly the same. Spend, lower interest rates, and just repeat. Net zero and the green movement, it's a great direction for humanity, but I think it's anything but deflationary. I think it's going to make the cost of living very high, especially when you compare the West maybe to the rest. We've got a very different view or different way of approaching going green. And of course, I think that's going to lead to a higher cost of living for us. I believe we live in a fragmenting world. I do think deglobalization is a trend in motion. How long that lasts, or, you know, I think it's a cycle too between, you know, centralization, decentralization, probably manufacturing, all these different things that lead to mining. Security of supply, I think, is going to be an issue going into the future. And I think that's becoming more evident. You take the US as the example. Their investment in MP materials and Trilogy and a number of other aspects, I think that's just really the tip of the iceberg, unfortunately. It will probably be good for metals and mining, but ultimately that's going to be probably a waste of taxpayers' money because they don't know how to deploy it properly. The other side to that is I do think permitting is going to be streamlined and moved forward, which is a good thing. And again, you're going to see that development money flow, not just from the US, but probably across the board. AI, I think it's probably an aspect of society right now that a lot are discounting in terms of the energy consumption that this is going to have. I asked ChatGPT how much energy it uses on a daily basis. I don't really believe this number, but it says 2.1 gigawatt hours per day, which is the equivalent of around 70,000 homes. I personally think that that's a little undershot, but when you compare it to Bitcoin at 350, it at least gives you some comparison of what it might go to. But I think if you look in your daily lives, you look around at what basic AI is going to be incorporated in our daily life, I would say that it doesn't take a huge prognostication to say that there's going to be a lot of energy demand really focused on AI data centers, and it's going to take a lot of copper to transmit that energy around. So ultimately, that is something very positive for demand and prices. War, especially when it comes to AI, it's really a race for both speed and the dearth of that AI, and which, again, I don't necessarily think is a great thing for humanity, but I think it's an obvious direction that we're headed in. When it comes to the mining sector in particular, again, rising metal prices are great, incentivizes new construction. But I think when you look around the sector, and this may not be obvious to everybody as a retail investor, but when you start looking around, you can see that talent is very thin. And there isn't as many people looking to become mining engineers. geologists. And when you get these runs on price, you get to $6 copper, that incentivizes new construction. Of course, you have a bunch of engineers that are then put to work to develop these things into mines, and it cascades. And that becomes problematic because you need to offer these people higher salaries, more bonuses, and of course that requires higher incentive prices to bring other production on demand, and it's kind of this vicious cycle. The other side is lack of exploration. For the better part of the last decade, the industry hasn't been putting the money back into the ground, and you could see that in particular with something like copper, where that pipeline of development projects ready to hit the road just aren't there. Not only this, but you have somewhat of what I would call like a geological inflation, where the number and the grade of deposits have been on a steady trend downwards. Again, problematic when you put together some of the positive demand aspects going forward of how you can get some more price appreciation in the metals. And the last point is just discovery is becoming harder to do. You're having to look deeper, go to the more far-flung places in the world, and of course, all of this costs more money. Thoughts on the precious metals market. So I really think the easiest money has been made. That might be obvious, may not be. As a contrarian investor or someone who looks for value, those sentiment changes are always the easiest money to be made. Looking out on the market now with a person that has myself that has been able to take some profits, I'm certainly not afraid to do that. It's getting harder and harder to find that margin of safety per se to redeploy, especially into something like the precious metals. I still think there is opportunity, but it's becoming much harder to do. Overall in this sector, I wouldn't say you're seeing like FOMO or irrational behavior yet, but I think that is certainly to come. The producers and developers, again, like kind of piggybacking on what I just said, it's harder to find the value that you saw 2 years ago, and that's an indication that I probably need to be looking somewhere else. And if you're going to go into that realm of things, be very specific on the reasons why you think that share price is going to go up beyond just the metal price. Because remember, the metal price is just one factor that makes the share price go up in these juniors and even the producers. On the other side of things, I think there is opportunity in the explorers. I think if you're able to pick right, if you're comfortable with the risk, there probably is some opportunity there. And you don't necessarily have to be on that high risk end of the spectrum. You see companies like Knorrland, these prospect generators, but the best of the best, they give you that opportunity to get some exploration upside without taking the full risk of that company that has a sole project, and it depends on this drill hole whether it's going to go up or down. And the last point I'll leave you with, I think if you're looking at a developer right now, I think where you might be able to find a good risk to reward opportunity is looking at those projects that are very close to development. I would say like something that already has a PFS, they're in the process of completing or doing a feasibility study, and they're approaching that construction decision. There just isn't a lot of projects that are set up that way, especially when you look on the higher end. And so if you can find them, that's a great opportunity in my view. I think thesis gold is one you want to look at. Over the course of yesterday and probably the rest of today, you're going to have varying views on cheap, fair value, or expensive. And of course, there's a reason for that because it's somewhat subjective. And as a stock picker, as an investor, you're going to have to come to your own conclusion. And of course, when you're investigating a company, these are the line items that you're basically looking or putting together to make a decision. And you have to get good at understanding each of those line items, and it's how you put them together that obviously is going to lead to your success and how you act as an investor from that point. But if you're hearing one person say, oh, everything is super cheap, and then I'm coming up here and telling you, oh, it's probably pretty close to fair value, well, it's probably in this equation that differs. And I would say the biggest one is metal price. I think most of the market is using a discounted factor on the metal price. They're not using $5,000 gold. They're probably using $3,000, $3,500. And of course, things look very different with those differentials on price, especially if you look like an all-in cash cost of, let's say, $1,500 to $2,000. That differential matters, especially as you discount it out into the future. Thoughts on copper. Like I said, I think the copper price is going to be headed higher. This doesn't necessarily mean tomorrow, but I think over time there's a good case to be made that the copper price will be headed higher. There's not a lot of ways to play from the producer standpoint, pure plays. There are a couple that are They're arguably like that. But the diversified miners, I think, especially given that I'm pretty bullish on the whole sector, I would say buying a good diversified miner is a great place to start, especially if you're new to the sector. For the developers, I'm sort of flabbergasted at how quick the gap closed. It's quite amazing to see how a gold market or positive sentiment on the precious metal side seemingly has this cascade effect across the entire sector. And I'm gonna talk more about that on the next slide, but there's opportunity with the developers. I think you have to be picky though. And on the exploration side, again, I think there's probably opportunity there, but you have to weigh the risk and who exactly you're putting your money or giving your money to when you invest in them. So the obvious question is, what's next? For myself, I do have a bunch of cash. I'm looking for where to deploy it. I'm a bottom-up investor. I'm agnostic to the metal. I'm looking for the best opportunity. But I can tell you, having done somewhat of a high-level look at companies with these different exposures, lithium, nickel, zinc, maybe not as much oil, depends, coal, there's a lot of positivity out there. And the better projects, seemingly, if you look at their charts, you look at their valuations, I would say it's pretty positive. It's not that like contrarian opportunity, especially like 2 years ago when nobody was interested. So it's just amazing to see what a good gold market can do to the entire sector. And I think there's a lot of positivity. And again, if you're looking for opportunity, you again have to be picky because it's not quite as good as I would have hoped. Cash, super important. One of the biggest mistakes I made over the course of my investing career was not selling or selling enough. And I think if we did a poll of everybody in this audience looking out 5-10 years, I would almost guarantee if you're truthful to yourself, that would be the biggest problem, is that you didn't give selling as much credence as you did buying. And that's usually where people make mistakes. And I can remember back 2019, I was with a friend, like a close friend and mentor. And we're walking down the road in Singapore, and I'll never forget it because it made such an impact to me. And he said to me, he's like, he told me about his experiences and how he lost money, and there's varying reasons. But he said, you have to learn how to sell. You have to put as much time into understanding price targets, to understanding how you're gonna get out of a stock as how you're gonna get in. And it stuck with me. And it stuck with me also because having the cash gave me the courage. He also said this, it was the last week in February, we were at the Red Cloud event, just before PDAC in 2020. And everything was sort of crashing around us with COVID hysteria. And he turned around and he said to me, he's like, what does it matter if my cash is in my bank account or invested in a junior mining company or a mining company? I thought, that's a really good point. And that might not seem as much to you, but I take things like that to heart, especially depending on who it comes from. And of course, I remember there was basically 3 days where that market dropped, and I had a ton of cash because the year before, he certainly convinced me to put my time into learning how to sell. And this doesn't mean you just empty a position. It means, it can mean anything to you, but you have to have an idea of what you're gonna do and take those profits when they're there. And I had that cash and I deployed it into a COVID market, and at that time, ended up with the best financial year of my life up until last year, which is great. But, what's that? Well, yeah, actually I did. That's a whole other story, and I can talk about that in another presentation. But when I say that I actually have learned from my mistakes, I have, and I hope you can learn from what I'm saying to you, and I'm trying to emphasize this because I know that's the mistake you probably will make. But cash gives you courage, and when things break down, and I think we live in an uncertain world, this is something you have to give credence to. My panel. I think if you wanted to look for 5 companies to invest in over the next couple of years, I'm very comfortable with saying this is probably amongst the top 5 that you can invest in. It covers the whole spectrum. It covers what I'm most interested in: gold, silver, copper, exploration, development, and very close to production in Firefly's case. With Thesis Gold, you have around 5 million ounces of gold equivalent. I think the silver, it's Thesis Gold, but they have a silver component that I think gets missed, that I hope Ewan emphasizes and lets everybody know, especially at $100 silver. You have Hot Chili. I was just down there at the end of October and did a site visit. got to visit Chile for the first time, got to see site, see how close the project is to the main highway, see what that project means to the local community, not only from a copper project standpoint, but also from a water standpoint. And that's a very important part of the project that I think gets missed by the market. And I think considering their proximity to production, it's going to be that much more meaningful, especially given the size of Costa Fuego. In terms of exploration, Group 11, Ballywire, probably or arguably one of the best discoveries, certainly over the last year. Zinc lead with a high-grade silver and copper component. You're going to hear Bart talk about the exploration they've done, this trend that they've outlined. It actually looks like we might have 3 parallel trends, which of course builds tonnage, which is so important. You have the high grade, but you need to build that tonnage to actually make it worth something. And I think they're well on their way, so definitely listen closely to that. Kenorland Minerals, been a cornerstone of my personal portfolio since they IPO'd. I have tremendous respect for the management team. Their value is rooted in their 4% NSR on Frotet. I think depending on how you wanted to evaluate that, you could say that Kenorland is basically selling just below that value just in the royalty, and you get all the other exploration for free. You're gonna get an update on South Uchi. You're gonna get the drilling with Centerra at Wabagon. A host of other projects, and it just doesn't stop. They keep on generating those projects, and they've proven that their system works, that if there's a gold system there, they'll find it. Firefly, my first site visit I ever did when I left steel manufacturing to be an investor full-time was to the Ming Mine, which at the time was owned by Rambler. It was a very special trip, as you can imagine. It was my first time visiting a mine site, and of course this was an operating one. And 8 years later, I was pitched the story on Firefly. Certainly resonated with me. I knew how much that Ming Mine, Green Bay project meant to that local Bayvert community. Going there in September, seeing it with my own eyes, visiting the people, most importantly, getting to know the new team like I have absolute confidence that Firefly is your next producer. It's in a great jurisdiction, and it's very meaningful to that community. Field notes. This is my YouTube series. If you want to see these companies, it's only portfolio companies that I do these site visit videos with. In July, we did Thesis Gold up in the Tootagon. Again, arguably one of the hottest gold exploration areas in Canada. Got to see site, you get to meet the team, you come with me, and you get to see it. Same with Firefly in September, and then Hot Chili this past October. As a request from a few subscribers, they wanted more of my ideas on the lower end of the spectrum. I'm starting the Diligent Speculator. It's $120 per year, which for Americans, $120 Canadian, that's close to free, I think. And, it'll be published monthly. It'll be published monthly, and you can go to thediligentspeculator.com if you're interested. Mining cycles create fortunes. Timing and discipline decide who wins. Junior Stock Review Premium gives you the edge. Please check out the 2 websites. Of course, if you have any questions, please let me know. Thank you very much.